Four banks collapsed. Worries about two others persist. Will they fail too? At a time when people are seriously on edge and just worried about where their next meal is coming from or if they will even have a job and maintain employment tomorrow. We have the added complexity and risk of a possible banking failure and total collapse. Should we feel assured by the statements made by Mr. Biden and the strength and safety of the banking systems, or instead should we be even more concerned and worried about what they're actually planning and preparing to do with our money behind closed doors? But, folks, things are not looking too good. I'm going to share with you an important banking story from a fellow YouTuber who has uploaded this just the other day about a strange occurrence after having visited his local bank branch.
Once you meet with a TurboTax expert who will do your taxes for you, you're free to do not taxes.
The Denali jacket.
And this is truly concerning given the current situation that we are in, the possible likelihood of a systemic risk of contagion and further bank failures around the country and around the world. Here, check this out.
What's going on, guys? I have a story that needs to be told. I'm not even really sure where to begin. I'm going to say that I had recorded this video from the bank and was just stuttering way too much because I really didn't know what to say or think. So I figured I'd come home, collect my thoughts, kind of regroup, and then refilm the video.
So I'm not going to sit here and watch the entire video with you guys. The link is in the description or in the pinned comment down below. However, he had an experience at his local bank branch that was quite disturbing. Now, granted, there was an update, a follow-up a few days later at a different bank branch, same bank, different branch. That was a little bit of a different story. But at the end of the day, we have to understand and realize that the banks are questionable. Our money is at risk, and there are plans and actions being taken behind the scenes to make drastic changes to what we all once knew as normal in the daily functioning and operations of cash and the future that more than likely won't include said cash and will be then replaced by CBDC or central bank digital currency. All the while, these government entities, these government agencies, the SEC, the FDIC, the Federal Reserve, the U.S. Treasury, the Biden administration are all working towards squashing cryptocurrency as a viable alternative to Big Brother watching every single move you make. And check out these comments from the viewers. Everyone should definitely be sharing their bank stories now. I went yesterday to pick up some silver I had ordered, and as I stood in line, I heard them asking people what they were using the cash for, as people are taking high amounts, which is none of their concern. Clearly, they aren't so willing to accommodate the customers now. Too bad, I say. You absolutely must let us know what happens with the next bank. The importance of knowing how the banks are planning to control our ability to get money and control the possibility of bank runs is incredibly important. Thank you for enlightening us to this issue. And this isn't shocking to me. A couple years ago, I was told we don't really have a lot of cash on site when I tried to withdraw a large amount. I know that's not the same thing that you tried to do, but it was shocking to hear that a bank doesn't have money. I would definitely like a follow-up video to see if the next bank you go to tells you the same thing. While a friend recently was quizzed pretty relentlessly by the teller about why he wanted to withdraw a fairly large sum of cash. After politely trying to dodge the question, he told me he looked her straight in the eye and said, "I'll let you guys read the rest of that comment." CoinDesk.com reports government unveils CBDC strategy. First phase to be completed soon, and bank profits at risk from potential CBDC transformation of global economy, with recent announcements from Fortune.com and Ripple and XRP may finally be real. So there may be some hope for potential good news on the horizon, but we mustn't start celebrating prematurely, as the XRP price predictions and recent surge could be just the start of a larger trend. And this could possibly be bad news for all these people holding XRP with 5 coins that are included in this analyticsinsight.net post revealing 5 coins that will give bigger gains than Ripple in 2023. Let's first discuss these banks, folks, and a little bit of a disclaimer. This is not financial advice, but most importantly, I'm not trying to contact you in the comments to text or chat via WhatsApp. So don't fall for the scams and avoid the attempted frauds, okay? So I want to read to you, I want to discuss what we've got here, which is 4 banks collapse, worries about 2 others persist, will they fall? Pressure on First Republic Bank mounts, while in Europe, worries surround Deutsche Bank. And it says here that there is no respite for the banks. For the third consecutive weekend promises to be decisive for the banking sector as investors fear that Silicon Valley Bank's SIVB difficulties will spread, and that on March 10, regulators had to shut down the bank, resulting in the second biggest bank failure in American history after the collapse of Washington Mutual in the financial crisis of 2008. 2 days earlier, Silvergate Bank SI would down its operations, and on March 12, regulators surprised everyone by announcing the shutdown of Signature Bank in New York. The crisis also reached Europe, pushing the Swiss government to force UBS to urgently buy its compatriot Credit Suisse CS for the modest sum of $3.24 billion. Credit Suisse, a bank shaken by scandals in recent years, was seen by investors as the weak link in the midst of the banking crisis. The Swiss government, in regulatory measures, even went so far as to change its laws to facilitate the marriage of the 2 of its financial jewels. Credit Suisse shareholders are not going to vote on this deal, even though the law until now had required investors in a company being acquired to weigh in. Legal actions by investors who have lost everything, in particular those who have bought the debt issued by Credit Suisse, are in progress. And in the U.S., regulators also announced extraordinary measures to avoid a general panic that would destabilize the financial system and the economy. They decided to guarantee all the deposits of SVB and Signature Bank. The Federal Reserve, or the Fed, also created a new backstop to lend emergency money to banks in need. Although, folks, we must make sure that this is clear that this is not a bailout, okay? But all this has not reassured investors, many of whom continue to fear contagion. Unlike the 2008 financial crisis, the problem this time around is not the quality of the bank's assets. Instead, the current crisis of confidence was caused by the fact that Silicon Valley Bank bet on interest rates without protecting itself against the risks attached to them. The same interest rates that were just raised yet again by Fed Chair Jerome Powell. The Santa Clara, California bank bought treasury bonds and mortgage-backed securities when interest rates were near zero. Since the borrower was the federal government, there was no risk of default. On the other hand, the risk that interest rates would rise was very present, especially since Jay Powell, the Fed chair, in mid-2021 began to warn that the Fed would soon raise interest rates. When this happened, the value of SVB's portfolio of assets declined, causing a loss of $1.8 billion when the banks sold some of their assets to satisfy the withdrawals of its startup clients who were struggling to raise money. SVB announced that it had to raise capital to the tune of $2.25 billion, and this announcement caused a bank run. Investors believe that a large number of banks, and more particularly U.S. regional banks, have made bets similar to the ones SVB made, and they wonder whether these banks have enough capital available to cover the losses if ever the customers wanted to withdraw their money. Therefore, all eyes on First Republic Bank, FRC. The bank saw the 3 major credit rating companies lower its rating. Although Moody's Investors Service reported, the bank announced that daily deposit outflows have slowed considerably, and Moody believes that with 68% of Q4 2022 deposits uninsured, the bank already has experienced significant deposit loss, eroding the strength of the bank's franchise. Furthermore, given the relatively short-term nature of most of the bank's new funding, First Republic still faces the eventual need to sell assets to repay these obligations. First Republic Bank shares are down 89% since SVB's troubles began. Folks, the list goes on and on as we continue on to see here. Founded in 1985, the bank offers private personal banking, private business banking, and private wealth management. It is present in 8 states, including California, Oregon, Massachusetts, Florida, Connecticut, New York, Wyoming, and Washington. First Republic Bank caters mostly to wealthy customers. A large majority of the bank's customers are uninsured, meaning that the deposits are not guaranteed by the Federal Deposit Insurance Corporation, the FDIC, and its unrealized losses represent about 40% of First Republic Bank's common equity Tier 1 capital, which is the bank's highest capital or highest quality capital, as it is fully available to cover losses. All this means that the bank may be vulnerable, very vulnerable, to a bank run. A coalition of 11 large U.S. banks tried to bail out the bank by bringing in $30 billion in deposits, but this failed to reassure. First Republic Bank is exploring other options, and the bank could sell itself, while investors and analysts are awaiting an announcement to the effect over this weekend. Deutsche Bank, the situation is urgent because doubts continue to spread to other banks, and this has been the case since Friday, March 24, with Deutsche Bank. The German bank has announced a plan to repurchase its debt. Normally, when a company redeems its debt, it means that it is solid. However, Deutsche Bank's announcement caused a sell-off, and Deutsche Bank shares fell 3%. At one point, the shares were down 15%. The bank's credit default swaps also soared. These are insurance that investors holding a company's debt buy to protect themselves against the risk of default. German Chancellor Olaf Scholz had to chime in, and he told reporters at an EU summit in Brussels that Deutsche Bank has modernized, organized the way it works. It is a very profitable bank, and there is no reason to be concerned, according to Scholz, what he said, according to a translation of his remarks. The open question is whether these words will achieve the intended objective, restoring confidence. But honestly, if you ask me, I would be more concerned about how these government institutions and governing bodies can literally just change the rules of the game overnight without any consent from those involved. Folks, this comes down to your money. All right, so what's next? Well, obviously, the government and their plans to prepare and moving forward with CBDC, central bank digital currency, and what it means for you and your family once it's enforced and mandated. So, the UAE expects to complete the first phase of its central bank digital currency strategy around mid 2024, according to an announcement by its central bank on Thursday. This includes proof of concept work for a wholesale and retail CBDC. The Central Bank of UAE, or CBUAE, also revealed an engagement with G42 Cloud, a cloud platform from the region, and New York-based blockchain firm R3 as the infrastructure and technology providers, respectively. And the announcement said that the first phase of the CBUAE's CBDC, the digital dirham, is expected to be completed over the next 12 to 15 months and will include 3 major pillars. And so, why does this even matter? What does this mean for you and I? And most importantly, how much time do we have left? Or better yet, how do we prepare? Well, folks, you can see here it says that emerging central bank digital currency cross-border transaction technology could transform the global economy by providing faster, cheaper, and safer services for many of its players. But banks may not fare as well in the next economy, Moody's Investor Service said in a report dated March 21, and many proposals for the domestic use of CBDCs foresee a crucial intermediating role for banks in their operations, but cross-border CBDC transactions would depend entirely on new infrastructure that reduce the role of banks more severely. So just think, the central banks are stepping in, the privately held and operated banks are stepping out. Moody's pointed out banks would see benefits from the new technology as well. Settlement risk could be reduced or eliminated, and as we can read here, banks would be able to make, clear, and settle cross-border payments at low costs in seconds without needing to sign up to multiple payment systems or rely on corresponding banks in their other countries. And in a CBDC driven economy, banks may well need to redesign their operations. They may be obliged to new networks and create the infrastructure necessary to support CBDC interoperability at scale, which will impose a burden on resources in the short term. So now I feel as though this would be no better time than ever to remind you of what CBDC, central bank digital currency, is actually, and its uh, intended purpose, because politicians are quietly preparing for a digital dollar, and apparently it's not good for your freedom, with legislation being pushed in all 50 states to ease the implementation of what is being called by some the Biden coin, which is extremely troubling. So just think, if Congress were to someday create an official electronic currency that is programmable, it would pose significant threats to Americans' liberty and privacy rights. Why then would so many lawmakers want to make it easier for such a currency to be used in their states? Imagine a programmable digital dollar, digital currency which could easily be controlled and tracked by a government agency or central bank. Everything you buy using a digital dollar could be recorded no matter where you go in the country. A programmable digital currency could also be manipulated so that it could only be used in certain situations or designed so that Americans would not be permitted to buy certain products or services. And folks, I want you guys to know that I am not making this stuff up. You can see it here shared on the screen. I mean, we're talking about tracking, tracing, taxing, setting limits, restrictions, and expirations. Oh, and negative interest rates, where simply put, your money starts to disappear right before your eyes. So I know that this isn't something that I'm interested in, and I don't want any part of it. Do you? Comment down below. Let your voices be heard. So now, folks, take a look at this. Now, along with Florida Governor Ron DeSantis and Texas Senator Ted Cruz, Tom Emmer leads effort to squash financial surveillance state initiatives. Thank you, Christy, for sharing the link where we can read here that Majority Whip Tom Emmer introduced the anti-CBDC or CBDC Anti-Surveillance State Act to halt efforts of unelected bureaucrats in Washington, D.C. from issuing a central bank digital currency, CBDC, that strips Americans of their right to financial privacy. Now, there's a lot here, but I've actually already covered this in a previous video, so go check it out after you're done watching this video. But this is some serious stuff, folks. This must be stopped. It's an unconstitutional invasion of rights and privacy, and has the potential to get uncontrollably out of hand if left unchecked and not slammed in Congress before becoming law. I mean, I hope Biden doesn't try to pull another one of his executive order moves and just sign it in overnight without our votes or consent. Much like the billions and billions of taxpayer dollars that he has been funneling into other countries and backdoor deals like cleverly designed to be a ruse and cover up like Ukraine, or even sending all of our oil, fuel, and petroleum reserves to Europe. All I know is I am making sure that I am continuing to focus on planning, preparing, and protecting with diversity, security, and cash flow. You all, please stay safe out there and be kind to one another, and I will make sure to report back soon with more information. Until then, you all take care. Thanks for watching, and bye for now.